In today's video, I am going to talk to you about my top 5 buy and hold stocks that will, I think, work really great into the future starting today. So let's get down and let's check out these 5 stocks. Number 1, and probably the most obvious, is Apple. You've probably seen my videos over the last few days or even the last few weeks, and of course I think Apple is extremely undervalued and for some reason just keeps on going down. It's just something that they keep on making so much money, and of course the stock market doesn't always love them. Currently pays a 0.6% dividend, and their volume is through the roof like always. Their 2-year chart looks amazing. Their 5-year chart looks even more amazing. They increase their dividends all the time. Even though it's a very small dividend, it still gets raised a lot. They have also blown out expectations over the last 4 quarters. Last year, they just absolutely destroyed revenue, and they did extremely well on earnings as well. So overall, a fantastic company. Something about Apple is they just make so much money. Their profit is better than expected this previous quarter. Just overall amazing. Now the second company is even better. Northrop Grumman. Now you're probably wondering, why would I buy a bomb and military manufacturing company? Well, guess what? Northrop Grumman is not just about military, it's also about space. And space is the future. There is going to be a lot of investment into space technologies, and of course Northrop Grumman is one that is basically at the forefront of all of that technology. It's basically between Boeing, Northrop, as well as Lockheed Martin. All of those companies are in the forefront when it comes to space exploration. SpaceX obviously leading the pack. Now, with Northrop Grumman, you would be then looking at 1.7% dividend, which is much better than Apple. But something else about space exploration, SpaceX, they're not on the stock market like Northrop Grumman is. However, if you were looking at investing into SpaceX, you can't necessarily do so right now. However, Google has invested in SpaceX, so technically by investing in Google, you could be investing in SpaceX, but just such a small percentage that maybe if you invested $1 million or $1,000, maybe 2 cents might go towards SpaceX. So it's not huge. But going back to Northrop, something else that I do like is their volume is pretty solid. You're not probably going to be buying hundreds of thousands of shares, so that's pretty solid. Earnings per share versus other companies in the same sector as Northrop, it's pretty cheap in my opinion. So PE ratio is, of course, very important, but you can really only compare it versus others in the same sector. The only thing I really dislike about Northrop is the fact that if you look at their 5-year chart, they really haven't gone all that many places. To be honest with you, they tend to hit around that 3 to 375 range a few times, and then they start to pull back. Will they ever get past that? Yes. However, something to really think of is maybe they may pull back to around 300, but it really does depend on what the world is doing. Of course, this is a weapons manufacturer, so of course if there's going to be war, their stock price tends to go up. But their dividend gets increased a lot. So, of course, if you really want to invest in a company that is one of the companies that are on the forefront of space exploration, but also one that will benefit from war, because, of course, if there's war, the stock market usually originally pulls back, and there is currently no wars being waged, which means that there probably will be one eventually. So, basically, this is a nice safe bet because now that there's no war being waged and space exploration is really starting to explode or expand, then at that point, you can still invest in a company that's going to be making money no matter what because of space exploration. And then if there's war, your regular stocks would pull back at first, and then, of course, stocks like this would accelerate. So it's basically like insurance. But I really do like the fact that their dividend has been raised substantially since 2018. It's gone from around $1.10 all the way up to $1.50. I really like that. They've also blown out earnings expectations by a lot over the last 4 quarters, but also check out their financials. Nice steady revenue increase. The only thing I dislike is how their earnings haven't also increased with this revenue increase, so just something to keep an eye on and maybe do some research on. Next is a Canadian stock, and that is TD. You can also get this on the US exchange as well, but this is the Canadian version because I am Canadian. But anyways, 3.8% if you're looking for a long-term dividend growth, especially the fact that Canadian banks haven't been allowed to raise dividends. They're going to eventually soon. This is a great stock for that. You're looking at millions of shares of volume, so absolutely fantastic. When it comes to their PE ratio, look at that, 10.79. This is a very attractive stock if you're looking for value. Anytime that a Canadian bank gets into the 9s, into the 10s range of PE ratios, you're looking at a fantastic deal. And over the last 5 years, it essentially did nothing. Coronavirus tanked the stock. Of course, it tanked the whole stock market in general. However, since then, it has accelerated, pulled back slightly. However, this should continue to go. This is around the level of support, so as long as it doesn't really drop any further than this, we should be pretty well fine. Remember how I was saying they have not been allowed to raise their dividend? Well, they haven't been allowed to raise their dividend. Usually they do it about once per year, so that is 1 year right there. Usually right here they would have increased their dividend. It doesn't sound like they're going to be allowed to until next year, so of course think of about 2 years roughly of dividend increases happening at one time. Also, fantastic earnings beats every single quarter. Revenue was slightly down last year. However, check out that earnings. Revenue was down, earnings was up. What does this mean when revenue is down and earnings are up? That means that when revenue goes up this year, that means earnings are also going to be going up huge this year because they have learned how to save money, spend less money, and make more. The next company is also another one of the Canadian banks. This is Royal Bank of Canada. For a slight period of time recently, it was the biggest company in Canada. It's gone back to Shopify, so now Royal Bank is, of course, number 2. Their PE ratio is a bit higher. Their dividend is a bit lower. However, again, we have to remember that they haven't been allowed to raise their dividend for a while. Being the second biggest company in Canada, they are going to be around for a very long time. They generally also have, in history over the last few years, their PE ratio tends to have a little bit of a premium to it, being a top company in Canada. Again, just like every other Canadian bank other than National Bank, I think, CIBC also had some good earning or good growth during this period as well. So other than National Bank and CIBC, all the others just tend to trade it sideways over the last few years. However, since the recovery, of course, the stock's gone up. Again, not allowed to raise their dividend over the last little while, so think of about probably 2 years worth of dividend increases once they are allowed to increase their dividend. Again, revenue is down. However, with this one is the fact that their earnings were also down, so expect that to be a turnaround this year. I would assume that they would do the same as what TD did last year and really cut back on expenses so that they can still have huge revenue but massive earnings growth. That's what I would assume would happen, but of course, assuming only means that you make an ass out of you and me. Next is Lockheed Martin. Now, of course, going back to the theme of space exploration really getting huge over the next few years, Lockheed is one of the few companies that is really set up well for that, and because of that, I would say that they would have to be on this list. Volume is not bad at just over 1 million shares average, and their dividend is pretty substantial versus the others in that sector at 2.79%. 8%. Their PE ratio is also a bit higher than Northrop, but still about average. For this sector, it's roughly around 16 to 17, so it's still cheap in a way. However, at the same time, you are looking at buying this for the future. You're looking for future growth, not just in space exploration, but because Lockheed Martin makes a lot of the military weapons. If there is again a conflict, this is nice insurance in case the stock market tanks for a few days or a few weeks or months if there is a conflict somewhere in the world. Over the past 5 years, their stock's done pretty well. It pretty much trades sideways for a while, accelerates, trades sideways. So it's not a stock that's going to be something that you need to buy today. Try to find a good entrance and then you can get in. Something I really do like to look at is, of course, the MACD. The MACD is actually currently not doing too bad. Now, it looks like it's just had a reversal, so there may be some downwards pressure. That's why I was mentioning that to pick your spots wisely to invest. You may even want to invest a little bit at a time so that you can get in at a lower average cost. Also, very nice to see dividend increases roughly about once per year. Sometimes in the past, if you look at the real big history, it was twice a year, but generally speaking, once a year, they'll give you a dividend increase. Also, something I really like to see is, of course, beating earnings estimates, but also seeing a nice steady growth in revenue as well as earnings. This is what I really like to see. Personally, I like Lockheed best out of all of the defense stocks, and I like Lockheed right now the best for the future. So if you're looking for some insurance for if there's ever a conflict, Northrop, Lockheed seem to be a really good company to invest in. However, if you're looking at the future of space exploration, those two are still really great and they pay a dividend. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe. I'll see you guys again next time.